So as you may or may not know, there are a ton of ways for you to make passive income in cryptocurrency. I want to talk to you guys about one of my favorite ones. Let's get it. Welcome to Everything Currency. This is a show where we talk about everything crypto and mo. I'm your host Jay, and today I want to talk to you all about passive income in cryptocurrency. So there's a bunch of ways to make passive income in cryptocurrency. There's a bunch of ways to make free money in cryptocurrency. Providing liquidity is one of the best ways to make money in cryptocurrency, and staking is actually kind of the bread and butter when it comes to passive income in cryptocurrency. So today I want to talk to you about some staking rewards and talk to you about one extra step I added on top of my staking that made this thing a little bit more interesting for me and got me a whole lot more value. So if you're excited about that, like the video, subscribe to the channel if you're not subscribed to the channel, and let's just get right into it. So first things foremost, in cryptocurrency, staking is a very valuable option to make passive income. You buy some cryptocurrency, you lock it up in the smart contract. It helps out the smart contract, and the smart contract pays you rewards for doing such. There's also very easy ways to stake, such as just buying a coin on a centralized platform like Coinbase, which they're custodial. They're called custodial staking, where you can buy, for example, Atom token, hold it in your Coinbase wallet, and each week or each month, Coinbase will give you a cut. What I don't like about that is if you learn how to stake your Atom yourself, you're probably most likely almost 100% of the time going to get more than what the custodial wallet, the centralized exchange, is offering you. So it is a little bit safer to do things yourself, in my opinion. But today you might be thinking, well, what can I figure out, or where can I figure out what tokens to stake, or what tokens should I stake? What should I do? So that's why I want to talk to you about this website called stakingrewards.com, earning passive income with crypto. Now this is a site that gives you a bunch of information about all the passive staking opportunities that are going on in crypto right now. And if you come right here, you can just see top 10 assets by staked value. So you can see Solana is giving out a good 5%. You got Cardano with 5%. You got Ethereum 2.0 with 4.8%, Avalanche with 9%, Terra with 7%, Dot with 13%. So these are already some pretty nice staking rewards, depending on how much money you have in there. Now for me, for staking, for it to be valuable, of course you want to think of it long term, dollar cost average type of strategy. Dollar cost averaging and earning staking rewards at the same time seems good to me, right? If we're going into, I don't think we are, but if we're going into a bear market and you're going to dollar cost average anyway, you might as well be making 5 or 10% on top of that. Your bank's only going to give you 0.01%. So you can come through this website, find a bunch of assets to see which assets you might want to stake, and then you can buy those assets and lock them up in whatever wallet that you need to stake on. For people who are a little bit more weary about the ups and downs or the volatility of crypto, you can also come in here and look at stable coins and figure out which stable coins you can get a nice reward on. For me, I like to check out the lending and see which stable coins will give me a nice reward on lending out my stable coins. That way, if I'm holding a stable coin, I can throw it on something like Aave, and then I can make a reward on people borrowing that for leverage or borrowing that for whatever they want to do. So here's what Aave looks like. You can see if I want to provide DAI, I can make 2.59% on that just by leaving it in there and letting people borrow against it. Real quick, I just wanted to note there are two projects that I'm pretty excited about based on the APYs that they're offering right now. The first one I talked about on this channel before is ClimateDAO, and right now the price of this token has just got murdered. It was at $3,777, not even that long ago, about 3 months ago, and right now it's at $50. And the reason why the price is so beat up right now because it was an ohm fork, so these things tend to sell off pretty quick. But I do like this token, and I'm not thinking that it's dead because of what they're actually doing. They're actually buying these carbon credits, and there's a bunch of them already in the treasury. And if you were to buy this token right now, the APY is 7,500%, and to me that seems like a nice a nice gain right there, especially if the token can do some type of recovery. So I wish I would have waited to get into ClimaDAO at these prices right here, right around $50. And the second one that I wanted to mention real quick is Looks Rare. Now, I'm really excited about this one because it is a competitor to OpenSea. NFTs are hot right now, and people need a competitor to OpenSea. OpenSea has decided that they want to go the traditional route, and people in cryptocurrency don't like that. They should have dropped a coin, and they should have had staking, just like Looks Rare is doing. So you can trade NFTs and get rewarded for it on here. So if a lot more of these big crypto whales start coming over here to Looks Rare, it could be pretty bad for OpenSea. But what's cool about this is you can earn 600% APY by staking your Looks token. Now keep in mind that these numbers will fluctuate, so if you're planning on holding this for about 5 years, just think that maybe I won't be getting 600% because over time this will drop a little bit. So maybe in 5 years this is only about 40%, but the first year I got 300% on average. The second year I got 300% on average. The third year I got 50% on average. The fourth year I got 100% on average. So it ranges, but it's still way more than you're gonna get from your bank, and that's just one thing that's for sure. So Looks Rare, it is a new platform. They did an airdrop. The community's talking about it. The community likes it. I was on a space with some people from the VV crew, and they were telling me, hey, take another look at Looks Rare, and I'm liking what I see so far. So staking some Looks token could be a pretty nice option. Now, of course, everything comes with its risk. So I buy, $1,000 worth of Looks token, and I try to hold it for a couple years and hope the value of the token goes up. And while that happens, I'm hoping that I'm getting some more tokens. But what if it doesn't, right? What if the price of this token goes to 2 cents? That will completely suck. So I added something to my staking that I think is pretty nice. I like what it's doing, and I want to bring it to you guys here. Now, there's something that I brought up on this channel before called Alchemics, and it has a token called ALCX, but I don't actually use the token as much as I actually use the protocol. So coming to the website, it says self-repaying loans, spend and save at the same time, and it's exactly what it sounds like. So in cryptocurrency, people are trying to find the best yield. I showed you some staking rewards. There's other ways to make yield. I showed you how people can lend out their stable coins and earn yield on that. There's these things called yield aggregators that are basically trying to find you the best yield. You deposit your money in there and hope that you get the best APY, and you don't have to go out and search for yourself. That's what Yearn Finance does. That's why it's so popular. That's why it makes a lot of people money. So this one is a yield aggregator brought by the MixX team, but what I like about it is long story short, this is what you can do. You can deposit stable coins into this protocol, and they will allow you to borrow against those stable coins. You can borrow a synthetic token, a synthetic USD called AllUSD, and you can have the loan that you borrowed paid for with the yield from the yield aggregator. So let's just say I want to stake $1,000 worth of ClimaDAO tokens, or $1,000. I have $1,000 and I want to stake some Clima, but I want to make sure that at the end of this 5 years I still have $1,000. Like, I want to preserve my wealth as much as I can. I will deposit that $1,000 into this Alchemics right here, borrow $500 against it, use that $500 to buy my Clima tokens, stake my Clima tokens, and earn money on the Clima tokens that are being staked. In the back end, the $1,000 that I deposited into Alchemics that got me the $500 to start staking the Looks Rare, to start staking the Clima token, is also making me money, paying off that $500. So by the time I'm able to withdraw my $1,000 from the Alchemics token, it will probably, hopefully, break even or break close to even, and then I can withdraw my staking rewards and make double the money. So for me, it's just adding another layer on top, and then you can make a ton more money on your revenue if you can just take some here, deposit it into the Alchemics platform, borrow against it, very low chance of getting liquidated because you're borrowing stable coins. You're lending your collateral is stable coins. So getting liquidated is there's a rare chance of that. Now, there are risks involved, like this protocol can just get scammed or this protocol can disappear, but I have been using it for quite a while. I wanted to see how it worked. I wanted to make sure that my loans were actually paying themselves off, and it is pretty cool to say that, hey, I have money over here staking, it's making me more money, and the money that I use to get those tokens is also paying itself off. The loan is also paying itself off. It's a great way to make money, and it adds to this passive income thing in crypto, and that's why passive income in crypto is so valuable. So if you guys want more information on stuff like this, just let me know. Make sure you do your research, because this is why DeFi is such a big deal. With that same $1,000, I'm already depositing that into one protocol and getting 5% automatically on that. Also, I can borrow against it while I'm getting 5%, and then the 5% will pay back what I borrowed. That is just crazy. That is just crazy. So if you could imagine, you find yourself a couple protocols, you can keep stacking on top of this. There's a ways that you can make a whole cycle and have this whole money rotation thing working for you. So I want to talk more about money rotations, because that is something that I definitely do in this market. I rotate from liquidity farming to staking to trading based on what the market gives me. So I'll be talking to you guys more about that. So I hope this video helps some people out. At the very least, I hope it got some people interested in the staking side, in the lending side of this market. I hope it gives some people some ideas of what you can do with your holdings. If you're just holding a big bag of crypto and you're sitting on the sidelines and you're kind of waiting, you should be making some money, in my opinion. This is not financial advice. Whatever you do with your money is your responsibility. So you make a lot of gains, that's your fault. You lose a lot of money, that's your fault. But if you need help, I'm here to help you guys. So like the video, subscribe to the channel. If you're not subscribed to the channel, check out my website, everythingcurrencycrypto.com. RIP to crypto roots. Health is wealth. Think positive, and positive things will for damn sure start showing up in your life. Till next time, peace.